Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the non-farms payroll and the opportunities its publication will present. We'll also talk about trading strategies that will be of great use to you before, during and after the publication of the report, which could help to improve your chances of successful trading. My name is Sasha and I'm a financial analyst from the research department at 4Trade. I'm delighted to have you with us and thanks for your comments. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now we would like to present our brand new offer that is exclusive to those watching this webinar. A special code will appear on your screen during the webinar, and I will repeat this special code at the end of this webinar that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours and that this new offer applies to all of you, not just second-time depositors. So please stick around. It will be well worth it. If you make a deposit within the next 24 hours, you can receive a balance bonus. If you deposit €1,000, you will receive a 2% balance bonus. Deposit €2,500 and you will receive a 4% balance bonus. Deposit €5,000 and receive a 5% balance bonus. Deposit from €5,001 to €15,000 and your overnight interest rate will be covered for 1 month. Deposit $15,001 to $25,000 and your overnight interest rate will be covered for 2 months. Deposit more than $25,000 and your interest rate will be covered for 3 months. You're free to use this bonus however you choose, but you might find it beneficial to use it on one of our market opportunities. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. Here is an example of a market opportunity. Here you can see fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, this shows the right moment, in our estimation, to come in and open a trading position. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is up. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kinds of profits. If the prices are going against you, then you can potentially have a loss of this amount. Support 1, 2 and 3. The pivot point is a starting price for opening a trading position. The support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. Why is NFP important for the financial markets? The non-farm payrolls report is the release of data on US jobs growth over the previous month, and is published by the Bureau of Labor Statistics usually on the first Friday of the month following the data. It is the most eagerly awaited monthly data by world markets. Morning trading volumes are usually slim in European markets on the day of the release as they await the afternoon release time. The headline number in the report gives the number of jobs that the US economy has gained or lost over the previous month. A more important number for the markets, however, is the difference between the actual change and the consensus of estimates by analysts and economists published in advance. The market reaction will depend on whether the published figure is above or below the consensus and by how much. Over the past few years, non-farm payroll data has been very positive, but NFP estimates have failed to meet expectations more than 6 times over the past year. Last month's figures were above expectations, as I will explain in a moment. As you can see, the unemployment rate has significantly improved in recent years. The unemployment rate approached 8.5% during the financial crisis, but has fallen since. Since March 2017, the unemployment rate has dropped from 4.5% to its current rate of 4.1%. Average hourly earnings is important since an increase in the figures indicates a possible rise in inflation and in the value of the dollar, while a decrease in AHE tends to push the dollar down. Month-on-month average hourly earnings were 0.1% in February. The NFP release comes together with the unemployment rate indicator on the first Friday of every month. When this is due, the trading week is a range-bound one for the forex market, and after the release, traders start positioning for the next time the Fed meets to see how monetary policy changes in the meantime and how to react. When the actual number differs from the forecasted one, the market travels. Usually traders try to take positions for the NFP in advance by looking for clues from other economic data, like the ADP jobs report or private payrolls. It's believed that private payrolls and the NFP data are linked in a directly correlated fashion, but this isn't always the case. The unemployment rate is part of the Fed's decision-making process to move on rates too. As a rule of thumb, a lower unemployment rate is better for the economy, as jobs are created, and this could result in the Fed hiking rates. Higher rates lead to a higher dollar, and traders usually buy it. There is no such thing, of course, as full employment in an economy. By the time the unemployment rate has fallen to below 4%, a labour shortage has already appeared, which experienced traders know. Forex trading is about anticipating what the central bank is going to do with interest rates at the next meeting, and the NFP is the perfect economic release to position on the right side of the market. The non-farm payrolls released on March the 9th, 2018 showed that the US economy created 313,000 new jobs in February, more than the predicted estimate of 200,000 jobs. The jobless rate remained at 4.1%. That's higher than the expected figure of 4%. The US dollar index fell by 0.52% following the publication of the release on March the 9th. On this graph, we can see the reaction of the market upon the release of last month's NFP report on March the 9th. As already discussed, the unemployment rate was below expectations, and NFP was better than expected. But lower than expected average hourly earnings at only 0.1% was the key figure that caused the dollar to decline and helped push US stocks higher. Traders felt that the lower AHE figure meant that inflation wouldn't rise quickly, reducing the chance of sooner than expected and more frequent interest rate hikes. As we can see, there was volatility with the euro-dollar during and after the release, and the euro-dollar climbed 0.5% following the NFP release. The day after, we can see that the euro-dollar fell back, which is not uncommon. Since then, we can see the euro-dollar declined as other indicators such as a stable rate of core PCI inflation helped to calm fears of more frequent rate hikes in the markets. The thing to remember is that the dollar is characterized by volatility at the moment, even more so because of geopolitical factors such as a potential trade war. But the NFP can also represent a trading opportunity for investors. Economists expect that this NFP will record that 190,000 new jobs were created in March, and that the unemployment rate will fall from 4.1% to 4%. But traders would be well advised to keep an eye on the average hourly earnings figures. If they are above expectations, they may cause the dollar to resume its upward trend. Average hourly earnings are considered a sign that inflation will rise. And if inflation rises, there is a greater chance of interest rate hikes. Some economists have already speculated there may be 4 interest rate hikes this year rather than the anticipated 3. It's worth noting that the Fed decided to increase its interest rate by 0.25% to 1.5 to 1.75% at their last meeting in March. What is certain is that reports like the NFP can have a major influence on the financial markets. Now that you've been informed, the important part. I will present two possible ways of how you can trade on high importance news announcements like the NFP. Perhaps the simplest strategy for a less experienced trader is to use the news long-term strategy, which I will cover last. In fact, most successful traders take the news long-term strategy into account. That said, if you've never traded during one of these events, or if you don't feel comfortable trading on a high-impact announcement, you can use a demo account and sit on the sidelines. However, the non-farm payrolls is a great trading opportunity, and if you take note of these strategies, you stand a better chance of success. Of course, you don't have to use these strategies, or you may prefer to continue to use your existing trading strategy. The Slingshot Strategy. This strategy looks to capitalize on the turmoil that may arise during an especially impactful event. In this strategy, the trader wants to look to go into the NFP with their full positions, so that if the volatility created around the announcement may be able to push their trade deeply into profitable territory, they can look to take advantage of that. The slingshot looks to scale out of winning positions as the trade moves in the trader's favor, and a variety of entries or entry strategies can be used to trigger the initial position. Support and resistance identification is a necessity before opening any positions. Traders can also take this a step further by looking to the hourly or 4-hour charts on MetaTrader 4, for example, to determine any trends that may exist leading into the announcement. This way, if the biases going into the NFP take place after the data is released, the trader can be on the right side of the move. Support and resistance is so important because that's the cut point a trader can use to close off the position if prices are going to move too far against them. Stops for long positions can go below support, and stops for short positions can go above resistance. So if either of these levels are broken, losses can be minimized. Traders are advised to investigate stop distance on their positions ahead of a data announcement as heavy as NFP. Spreads can widen Spreads can widen quickly as market makers don't want to take a loss on the announcement. When spreads widen, stops can be triggered before prices begin trending, and this can be disastrous for the trader. A short slingshot strategy would involve taking the reverse or opposite approach. In the entry bar, we look to see if it will penetrate the high of the setup bar and so on. If you decide to use the slingshot, you're advised to wait at least 30 minutes after the announcement of the official figures, since volatility will be very high, and it's very difficult to identify the right trend. Non-farm payrolls can be a game changer. A big beat or a miss can stop a trend dead in its tracks and create massive reversals. But this doesn't happen every month. In many cases, enormous volatility is created around the announcement with some slight follow-through afterward, only to see trends resuming their previous trajectory. This can potentially be a huge opportunity for longer-term traders to pick up or add positions at a much more favorable price than they would have otherwise been able to. But to give you an example, let's say that you are bearish on the euro-dollar for whatever reason. Perhaps you're just a really big US dollar bull, or maybe you don't believe in the European economic recovery. Whatever the reason, you know what you want is to get short euro-dollar. After spending a month confined to an inadequate range near long-term support, you haven't had a great entry opportunity in the pair. You can go into the NFP looking to do some bargain hunting. In case you missed the promo code during the presentation, this is your opportunity to take advantage of our special offer, which will last for 24 hours. The promo code is FTD1X. Again, we feel it's a great option to use our special offer on the NFP or trade using one of our market opportunities, but the choice is yours. Of course, we at 4Trade will be following any developments that affect the market very closely, so please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until then, goodbye, and please join us at 4Trade again soon.